Well, good afternoon, everybody. Welcome to Selecting an Option Strategy. I'm Connie Hill. This is a great place where we can learn about a lot of different strategies because you want to have a lot of arsenal in your backpack for whatever the market brings to us. How many of you are breathing a little bit of a sigh of relief today? Like, oh, the pullback is over? Well, some of you might be having a relief type of feeling, and some of you might be in greedy mode. You might be like, let's go find some opportunities after this pullback, and that's kind of the mode we're going to be in here today as far as looking at opportunities that maybe didn't get hurt so badly, though it looked like they're still trending pretty well. All right, I'm happy to have you join me here today. Let's see here. I'd love to have you follow me on X. I'm Connie Hill CS. I'll post educational content out on my X account. It's free to join and follow. Would love to have you follow us. Let's go through our disclosures and then we'll get into the agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about here is for general information purposes and educational purposes, but don't consider it a recommendation. We'll be using the Paper Money software application. It's for educational purposes only. I think it's a fantastic tool to try out strategies maybe you're not comfortable with, or rules that you want to see, hey, do these rules work for this strategy for you? Investing involves risk, including the loss of principal. Short options may be assigned at any time, regardless of the in-the-money amount. With paper money, it does not reflect that functionality. It does not assign early, but the market can and will assign you early. Past performance of any security or strategy does not guarantee future results or success. All right, we always want to just take a quick peek at the market because it sets an idea for what do we expect with our positions that we're currently trading. And how does that impact, maybe that outlook impact our looking at different opportunities, right? Determining our posture, if we're bullish, bearish, feeling like volatility is higher or lower, all those sorts of things. And then we'll come back and look at different strategies we could consider. We are going to follow up on one interesting position that we put on last week when we explored the double calendar. Had a couple of weeks doing that, and I'll give you an update on that. So let's hop on over to our Thinkorswim here. And I think it's going to be that one. Excellent. Bring that up. All right. And right now I've got the SPX up, right? It has kind of been interesting what's been going on here because the uptrend hasn't diminished per se, but it's kind of been stuck in this sideways pattern here. There is maybe some short-term support where the points get a little bit higher on the low side on that trend line. And then the top peak we're seeing here. So there's actually a couple of price patterns in here that we might want to pay attention to. So one would be the sideways consolidation. And then the other would be basically this ascending triangle. I've kind of have it marked out here, but I'm going to put a kind of a block around it so you can follow my white outlines. This is a bullish continuation pattern. And sometimes we'll see stocks or markets kind of get stuck at a little point, but the lows keep getting higher and higher. And we expect at some point for it to push through there. And if and when that happens, that might be reflected also in a lot of other stocks, not just what we're seeing here on the index. Okay, so that's something to consider. Let's look at the NASDAQ here. On the NASDAQ, kind of a similar type thing going on here, right? Where, and I don't have my sideways lines out here as much, but you can see this sideways area here where the NDX has been trading for the last, when did this kind of start? Like September, October, the last couple of months that we've been in. And then the same thing here, horizontal resistance about 25,000 plus, and then an ascending line. And we're looking forward to see if it breaks above that resistance. Because what's the other thing that we might be seeing in these formations? If you're familiar with price patterns, we might be seeing what? A double top. both of them on the SPX and the NDX. And so we want to be aware, okay, we've got a bullish pattern, we've got a potential bearish reversal pattern that we'd be looking for. On the reversal, the double top, what we would look for is for the, say on the NDX, for it to cross down below where this midpoint is, basically on this giant red candle. We'd look for a significant close below that, and that might indicate, whoa, maybe we are in for a little bit of a retracement. Now, I've also left my RSI on here, and I want to point out that we are having a divergence here on the RSI. Remember, a divergence is when you see the index or the stock, whatever you're looking at, maybe making equal highs or higher highs, and then the index or the study, like the RSI in this case, is doing the opposite. It's not making higher highs. Okay, so we can see in here, let me get this back. If I were to just kind of draw this line in here, we can see, okay, yeah, that was the peak in price. That's good. It ran up to that same level again here the last few days, but the RSI hasn't been going up as high. So this is kind of a yellow flag of warning. It doesn't mean throw the baby out with bathwater or anything of that nature. It's just kind of a, hey, pay attention. Things might be changing here, but we absolutely want to see price confirm it. We don't get all excited. Oh, divergence, scary, scary, because they can go on for a long period of time. If we go back here to the SPX real quick, same thing. If I were to draw in here, the RSI, yeah, we've got a downtrending RSI here when the index did the same thing that we were seeing on the NASDAQ, where we'd expect the RSI to at least be equal for this equal high. All right, but we're not seeing that. So it'll be interesting to see. And of course, we could say, yeah, it has a double top too. And it could go either direction. So it'll just be kind of interesting to see. Now, let's see something Scott says, yeah, but you regret not having set up some better stops. Yeah, you might have been in some positions that maybe went down to your stops. There have been some significant pullbacks on some growth stocks that really have been running up, and man, they pulled back really hard as well. All right, now let's go ahead. Let's jump back to our slides here for a moment. What strategies are you finding success with? What strategies are you feeling comfortable with using right now, given our market conditions? And I didn't show the VIX, but the VIX has pulled back to like 17, 16 in that area, where that means it's not incredibly volatile and not as high as it was when we were seeing a couple candles last week that were major pullback days. So bullish strategies, we've had a lot of opportunity to focus on, right? We've done several of these strategies. We've been exploring. Last week, we did a double calendar over earnings. We've actually done that a couple of weeks in a row. We're going to follow up on one of those. Maybe if you're a little bit more neutral, iron condors, where you're doing both a short call vertical and a short put vertical, with the idea that maybe the market's going to stay in between there. Okay. I told you we did a double calendar, and that really could be on the list here as well as a neutral strategy, or the idea that we're looking for the stock or whatever we're looking at to say stay in a combined area. Now, as far as trades might be working for you, Greg says vertical, very short-term verticals, meaning you're not trusting the trending. The trending has been a little bit iffy for you, so you're saying this short-term maybe. Couldn't I start at the bottom and go up? I'm not sure what you mean by that, Frank. Are you talking about these strategies here, going from the bottom of these strategies up? Or maybe you're talking about on the chart? You might be talking about on the chart on the RSI. Tell me if that's what you're talking about, Frank. Because typically what you're going to do is just look for that activity in the price and the RSI and seeing if they match or if they're a mismatch. Okay, if they don't match, then that's when you're saying there's a divergence. Okay, well, let's head back over to Thinkorswim. And I had kind of a sad, interesting thing happen on my Thinkorswim today. And I'm going to show you this. I do want to mention Cameron May is in the chat as well. He's here to help maybe catch some questions I can't quite get to, or things maybe a little bit off topic. You'll have my back on those types of questions. So thank you, Cameron, for being here today. Let's go to the monitor tab here. And we're going to go to my activity and positions. I want you to see what happened. Zero quantity. And then down here in this unallocated area, this zero quantity. And it's listing a whole bunch of stocks that we've been using over the last few months for our trades. This could have been the ticker symbols actually from the whole year. All right. And so what happened all of a sudden, it just kind of wiped out some of my data, not all of it. Usually when you go in and you reset your paper money portfolio, it puts everything back to the beginning, right? You don't see transactions, you don't see positions. The positions you were in at the time you hit the reset still show up here. And then you do see a P&L day figure here, and then P&L open will be 0 like what we're seeing here. But earlier today, I just had like 4 positions out here in my unallocated area. I did not have all these enormous number of positions. I did try to see, if anybody else has this kind of a glitch on their paper money, if it can be reset to the way it was. And you would have to manually go in and do some work to get those positions back to the way they were. But usually on a reset, this is what's kind of interesting here. We're going to go in here to Decker. And usually you just don't see the data. It's like gone, it's wiped out. But I can pull up, any of these stocks. I can see different option trades that we have on them. Usually it's going to be wiped out. So it's kind of a weird situation that I had happening to me here today. But I do want to follow up on a trade that we can still track. All right. And someone sold that's what it looks like, is that somebody sold everything. I don't know how that happened. In any case, let's take a look at something. Last week, we put on a double calendar on Decker. Decker is supposed to announce this afternoon. They haven't announced yet. And so what we did a couple of things. One, we put on a call calendar and a put calendar kind of as a separate trade, lining them up separately. And I want to show you here about the net debit. Now, when we set these trades up to go, the market was closed, just like it is now. And so they got executed the next morning here, 7:31, right after the market's been open for a minute. And then a few minutes later, as I was looking at this, I was like, if I were to put on the double diagonal as a double diagonal right now, it should be the same. But guess what? The price was significantly lower. I was getting both of these calendars for 58 cents, whereas the night before, it was just the put calendar that was 58 cents. So basically, we're getting a whole lot more for our money here a few minutes later after the market opened. And sometimes what happens early in the market is prices will get filled. Maybe a little artificially high, and they're bouncing around. Sometimes you might not get the best fills, and then it kind of settles down into a range that's a little bit more normal. Now, the next thing I did is I said, well, with this double diagonal, if I went out and bought it again right now, what would we see? And so that's this transaction right here. I went out there today because I was preparing for our class, and look how much it would have cost to put on a similar trade. $1.08. All right. What does that mean in terms of this trade? It means if my paper money hadn't wiped the thing out, we would have gone from, like if we were using this one here of 58 cents, implied volatility has run up to the point that, we might have decided before the day ended, if we've gone from 58 cents to 108, that's a difference of 60 cents. So almost a little bit more than 100% return there. We might have said, we're happy, we'll take our money and get out and not even go through earnings. Okay. That was one thing that I was hoping to see a little bit earlier in our class that didn't ever materialize, but it seems to be materializing with this stock. So I just went in, bought the double diagonal here, just so we could see the price comparison of what it really could have been for us had it not been wiped out. Okay. Let's see, Dennis, what are you saying here? Is there a list of all the trade strategies with sample trading plans for each? There are some trading plans available, and Cameron might want to speak to this a little bit as well. There are some trading plans, but some of them are like part of the course, and some of them are not necessarily listed in the courses. Okay. And I know Cameron, and why I said Cameron might want to chime in here is I think he did some webcasts that were introducing some trading plans, and Barb Armstrong did as well. In fact, let's go find them. Okay, I'll show you where it is. Somebody's letting us know that, okay, Decker right now is down about $6 in after hours. Okay, so maybe Decker disappointed a little bit. What was interesting also on this trade, when we did the market maker move last week, that basically says add the straddle for the call, the straddle for the put together. That is the expected range of the market maker move, which at that time was $13. Today, when I went in and looked at the market maker move, and we'll see what it looks like right now, it could have changed. Yeah, it's at 1150, so it had dropped a little bit in the last week as far as maybe not so much priced in to those options. But interesting, because for us, from where we got in, yeah, those premiums increased in value to the point that you might go, man, had I been able to actually show you, that we could have maybe got out of the trade without even going through the earnings period. So it'll be interesting to see if they're down $6, then they're down here maybe right around $96 or so, maybe right now. We could take a look at it. And how close would that be? Well, we did our put spread was at 85, so it's well above that. Our call spread was at 113. So tomorrow, had we still been in the trade, we would have expected those front month or front week options, the volatility to just collapse out of those as well as the next week out. That just kind of comes crushing out. And our peak area of where we might look to see a gain is either going to be at 113 or at 85. So it'll be interesting to see if it continues to drop. So I'm going to watch this tomorrow, see how the market reacts, and see maybe had we still been able to be in this position at 58 cents, what our results might have been. Okay. Robin says, yeah, Barb definitely has some trading plans out there. Not yet, and like Cameron said, not every single strategy, but there are some. Okay, let's hop over here real quickly. I wasn't going to go here quite so soon, but let's do it. Let's pop over here to our Trading Talks YouTube channel. Okay, if you're a subscriber, it just makes it so much easier for you to find our content. So if you haven't done that yet, just click on that little blue subscribe YouTube icon so that you can see our content. And then you can look things up. Now, this is totally unrehearsed, so I'm hoping it'll come up for me. I'm going to put in here a search under investing plan. Okay, I'm not going to put the word option in there, but I am going to put in investing plan. And we'll see what kind of things we get back. And it looks like Cameron's got one here. Scott's got a couple. Scott's got several. Brent has one about leaps. And I did a sample investing plan for our watch list in the getting started with stock investing class. So I had gone through one there. So there are a lot of different, I was going to say, webcasts that we've done in the past that do outline a potential plan. And it doesn't mean it's the best plan or the only plan or the one that you should use. More than anything, these plans give us an idea of some of the things to consider when we're creating our plan. And I'm going to go into the education here real quickly. Come over here to Schwab, learn. I'm going to come over here to courses. So learn and then courses. And then we are going to come over here this is insights in education. I want to go a little bit lower here. Sometimes we change this. And so here's a section here for the courses, options for beginners, income strategies, directional options, single options and spreads. And then there's more. There's like an advanced one in here. So those are the couple that we just looked at, the income strategies, the single option strategies, the non-directional options, which are a little bit more advanced. Those are kind of fall into the neutral strategies. Okay, so yes, inside there will be some investing plans, but not necessarily for every single strategy. Appreciate you asking that because I haven't shown that to you for a while. Charles wants to know where is the link for the trading journal. Well, since we're on our Schwab site, let's go find it. We'll go to Learn and we'll go to Schwab Coaching. We're going to go to the calendar for our webcast. So we'll go View Calendar. And then there's a couple of classes where this trading journal exists. I'm going to go to Barb's Trading a Smaller Account right here. So that was Monday's class. And so for this class, it's on Mondays and Fridays. When you go into that, you can see Trading Journal here that you can click on. You can download it into Excel. And then there's a couple of short videos here that teaches you how to use the trading journal. Okay, so I think it's a fantastic tool as you're learning strategies because it can help you kind of figure out maybe where your flaws are, maybe things that you're doing well and the things that you want to improve on when you track those trades. So all right. Dennis says there one strategy for the strategy presented today. Last week's class, actually the last 2 weeks' classes, Dennis, I did outline basically some rules that we used for the double calendars. And so I'm going to refer you back to the playlists, okay, out here on YouTube. Come out to the playlist, find our selecting an option strategy. And then if you wanted to start with 2 weeks ago, you could start with 2 weeks ago where we delved into it fairly deep. And then last week we reviewed some of those rules again as we put on that double calendar on Decker. All right, so lots of information for you. I know when you're new, it's hard to not necessarily know where to go, but that's where you need to go. All right, well, let's take a look at the other stuff we want to take a look at here today. And let me just pull something up here. There we go. All right, let's come over here to our charts. We talked about the SPX. We talked about it pulling back the support. And there are some stocks that really got knocked down really hard that you're kind of like, I don't know if I trust it quite yet, right? Let me think. I think one of those that I was looking at was it QUBT? It have been this one, where the high on October 3rd, so 20 days ago, was up here at 25, and it got knocked down hard here. And if we go measure that using our trend line tool, it was a percentage pullback, say from peak price to lowest price, of about 47%. Okay, you can see that in the box that's calculating just above where the high price is on that green candle. 47%, that's kind of vicious, all right? MACD went down here really low, the RSI went really low, and we're getting a bounce on it today, but you might be going, I don't know that I really trust it. It hasn't broken a diagonal resistance yet. But there could be some opportunities where maybe we just saw a little bit of a pullback, and it was nice to see a pullback because then you're feeling like, okay, now is a potential opportunity to get in. Okay, so we're going to look at a few that maybe fit that bill. First one we're going to talk about is Dell. All right, now Dell, it's kind of had a little bit of a mild pullback. Okay, it was up here at 166, pulled back here to 146, so maybe about $20. And then more recently here, we can see, yeah, it looks like maybe our low day in this kind of 4-day pullback, which was kind of shallow. The high on this low day was 153.30 or 151.30. Sorry, it didn't close above it here, but today it is closing above that. So today we do have a close above the high of the low day. Some traders like to use that as an entry, okay, for something that's bullish. And, you might be a little bit picky about maybe not, maybe waiting for a couple of things, either stocks to maybe rebound up a little bit where you're like, okay, it's broken a diagonal resistance, might not be setting a higher low, but maybe it's breaking out of a diagonal resistance, or some sort of evidence that maybe it hasn't pulled back that far to have ruined the trend. So like on this stock, we'd say maybe previous lows were kind of, I'm going to try to use that oval, kind of in here. And then you have another little pullback here, and then it has its high, and then the pullback here was a little bit lower. And then I would say this actually went a tad bit lower than this, but it wasn't extreme. It wasn't like it crashed way below it. Some people might look at that as possibly an area of support because it's in such a shorter range there. Okay. So maybe as you're looking at opportunities, look at those that seem a little bit more like the market's still engaged with it versus like the example that I showed you. And you could use that example that I showed you. Just be aware of how severe the pullbacks have been and how big of a recovery has it had or does it need to have. Okay, so here's Dell. They don't have our earnings for a while, so their earnings are clear out here in November 25th. I think that'll be right before turkey time. All right. I think turkey time is the 27th this year, but I'm not positive. In any case, this is looking fairly bullish. Now, how about the implied volatility? It's a little bit higher. It's above 35%, so it kind of falls into a high category, but not super high. But it kind of gives you the idea that maybe you just wouldn't want to necessarily do some long options unless you were feeling really comfortable about the move. So what we're going to do here is we're going to pull up the November 21 options. We're going to be doing some spreads. In fact, all the ones we're going to use are going to be in the November 21s because they have lots of open interest. And they're kind of in that bucket of time that we like to use between 20 to 40 days on verticals is kind of like the ideal scenario. And there it is sitting right smack in the middle of that. Okay. So that's why we are not even going to pick through some of the weeklies. Although if you wanted to, you certainly could. Okay. If you were being more aggressive. Somebody in here said earlier that they're trading very, very short term. And so I don't know if that's something you would consider. But just make sure you've got enough liquidity. Okay. That's one of the things I'm a little bit of a stickler for. We're going to put this trade together. We're going to do, let's see if this still makes sense to do. 152.50. The stock's at 154.23. And if we were to buy a vertical here, we could spread it out by $5. I mean, it's spread out by 250, but I really like seeing this open interest here that I wouldn't mind doing. Yeah, let's actually, let's see, moved a little bit on me. I was thinking actually of doing the 157.50, and that's not too bad, 142 and 111. As far as open interest, but there'd probably be substantial open interest there for the number of contracts we might consider using, just being a little fish in the big pond of contracts. All right. So we would be in this case risking 235 to make what? To make $5 minus 235, right? That's the difference in the spread, which puts us at about what? 265. So we'd be risking 235 to make 265. How big of a request is that on the stock? Well, let's go out to 157.50. I'm going to put my mouse there, and I'm going to make a mark in here. 157.50. Oh, okay, that's pretty close. 157.62. Okay. We need the stock to move that much. Does that look like a big request for this stock? Probably not. Probably not a big request. And so it could be something that, maybe we're just in for a few days and we get a chunk of the move and we take it or take the profits and get out. Maybe we play it up to this area and see if it continues on. If it doesn't, that's okay. Then we'll take whatever profits we generate from where it is, maybe up to some resistance up there around 166 or so. So let's go ahead. Let's put this trade in. In this class, we can risk up to $1,500 a trade. So let's see how many contracts could we do here. If I pull up the little calculator, let's go. We're going to go, I covered that up. Let's move it out of the way. 235, or actually, let's do this. 1,500 divided by 235 says we can do 6 contracts here. So we will. We're going to do 6 contracts. That'll keep us below our point of where we need to keep it to. Let's put in a buyback order. We're going to put in a first trigger sequential. We're going to put in an opposite order here. And what is a chunk of, say, 265? Some of you might, when I've asked you this at times, and I want you to kind of respond in your head or to your computer screen or whatever, what to you is a good enough chunk? Is it 50%, 70%, 90%? Test that out in paper money. Okay, if you're not comfortable with that yet, we're going to go with 70% on this trade. So 265 times 70% means would be satisfied with bringing in 185. So we'll say 185 plus 235 means 420. We're going to go ahead and say if we can get the spread here to 420, we're going to be happy campers. We will be happy to exit the trade early. Now, that's not the only time that we would exit the trade or consider exiting the trade. Like I said, if it gets up there to resistance, maybe start stalling out a little bit, we might go, okay, we'll just take what we have and be on our way. Maybe at that point, it's 50% or 60%. We don't really know, right? All right. Where did I get the 235 from? So the 235 is, let's go up to the activity and positions here in the working orders. That is the net debit. Okay, that's where the 235 is. So for every contract that we do, remember we always take this amount, multiply it by 100. So per contract to get into the trade, it would cost us 235. But then and that's our max theoretical loss. So our max theoretical gain is going to be 5 minus 235, and that's where I got the 265. Okay. Let's see. I don't know if RB Tech Trader says, I have a screenshot for the DECA option trade. Should I post it in here? I don't know if you can. I don't know if it'll allow you to. Okay. Somebody said 210. I was coming up with a little bit different number than that. But maybe for you, 210 is appropriate, and you'd be happy with 210 out of the 265. Yeah, whatever works for you. Okay, let's get a couple more on here. I kind of want to fill our bucket here. Good. How big of a pullback has it had? I mean, yeah, it pulled back with everybody else. Let's go to its high, from its high point to its low point yesterday. That was about 34%. So not as hefty as that 47. That 47 was owie. But what some people might be looking at here is that it actually kind of formed an equal low as opposed to a lower low, right? So previous low here came down to that low point there yesterday. So kind of an equal low. And looking, in this little pullback, some people might consider that a close above the high of the low day. Some might just consider this a bounce off support, right? Because I could come in here and draw that. I picked the wrong icon, but we'll make it even 0 there. Okay. Old resistance becoming new support. Looks like it's bouncing up off of it. Has some potential to go back up. All right. They announce earnings on the 5th after the market closes. Some of you like to avoid holding over earnings, and you could make a rule or have a rule that you're like, I'm going to be out before earnings. I don't care if I'm down a little bit or up a little bit or close to my target. I'm going to get out before earnings. Okay, that's going to be our approach here. We're going to try to be out before November 5th. We've got, what, 2-3 weeks for that to happen. So let's take a look at it. Yeah, it didn't work. I didn't think you could post that, RB Tech Trader. So thanks for trying. Feel free to post any information in there that you want. Okay, as far as what you were trying to send us or show us. Okay, I would say options probably aren't going to be fairly reflected, but at least the stock price would be, right? Seeing where the market's reacting, at least initially, to their announcement. All right, on Hood, we're more bullish. We're saying that thing hasn't had too big of a dip. Maybe there's a nice little ride we could take back up. So we're going to do here, we're going to do another long vertical. We're going to go, stock closed here at 134, and I was actually, we could do 134. That would be all right. I was looking at the 135 from where it was initially here because I really like that open interest there. And I was looking to do 135, 138. Let's see where 138 would be on the chart. All right, put my mouse here. Let's go up to, oh, there's 138 right there. Oops, that's too high. We'll plug it in here, 138. Is that very much? Do you think that's very much to ask the stock to do? Probably not. And so we're going to be going for a little, with the idea that we're going to do trades that are a little bit more aggressive because we're going to do long verticals instead of short verticals. The short vertical, we might sell something down here and just hope that it stays above it. But this thing is looking like it's ready to rebound, right? We're looking at the MACD rolling up, that RSI is pulling up, it bounced off support. We're getting in early on it. So that's why we're taking maybe a little bit more aggressive approach here with it. So on this one, let's do 135. We'll go vertical, and I'm going to do what I originally was thinking about, 135, 138. Okay, there's some decent open interest there. I think we'll be just fine. Will be a small number of contracts there. On this, now we've got a $3 wide spread. Okay, so we're going to be risking what? We're going to be risking 123 to make basically $3 minus 123. We'll pull our little calculator up here. Clear it out. All right, so we'll go 3 minus 1.23. That's $1.77. Now, we don't have to be that aggressive, okay? But we're looking at it that this stock has been making big moves, and we're hoping it continues to make a big move up. That's our expectation, so we'll see. All right. So I'm going to say this is pretty aggressive. Do we have to get all of it? Do we have to get all of 177? No, we don't, right? We would be maybe looking, again, for a percentage of it. What if on this one, because it's such a big amount, what if we said we got 65% of it, okay? If we got 65% of 177, we'd be bringing in $1.15 of the 177. And so we'll say 115 plus 1.23 is where we'd be happy to get out, right? The price of the option there. Let me put this over here for a moment. Let's put that, write that number down, 2.38 is where we're going to put in. Well, I wanted that to go over here. 2.38 here. There we go. That's where our target's going to be. How many shares can we do? How many spread can we do? One thing that's nice about smaller dollar increments is if you're trading a smaller account and you need to keep your contract numbers low, it can be really helpful, right? Having those single dollar increments. On this one, again, we can risk $1,500. So $1,500 divided by 123, we can do 12 contracts. Now, you don't have to do 12 contracts. But because we're just going to position size to the size of our $1,500 risk tolerance, we're going to go ahead, we're going to do the 12 contracts, and we are going to put in a first trigger sequential. We'll put in an opposite order here. we already calculated we'd be buying this back for $238. And we'd be happy campers. All right, we'd say, give it to me. Happy. So yeah, this is going to be a limit order. Good till canceled. That's what we need to put there. Click confirm and send. Move it to our option strategies bucket. All right. I might not have put our first one in the option strategies bucket. Now, RB Tech Trader says, just summarize, you bought it last week for 55 and now it's 132. Now, that might not be, you're referring back here to our Decker trade, right, that we talked about earlier in the day, and you were trying to help show us the results. We saw what it was before the market closed, where I got into it again. I don't know if the 132 is a price that we'll see in the morning if it really shows up around that area. Interesting to know. Don't know how accurate that reflection is, right? If it was just by the end or not. Now I'm looking in the chat. We have a survey here today, you guys. You know what that means. From time to time, we take a survey, see what your thoughts are about this particular session. And we love it. We appreciate it when you fill the survey out for us. It's not hard, and I don't mind easy surveys. There's 2 questions you can fill in the radio button, plop, plop, 2 seconds, and you're done. There's also a couple of places you can ask or answer some question if you wanted, like what would you like to see happen in this class? And I'll encourage you to tell me also if there's something that you are having trouble with or you would like to see shown in this class, because we have all kind of a pretty wide swath that we can cover in here. If there's something that's troubling you, let me know. See if it's something I can work into one of my upcoming classes, okay? Because I like to cover what those concerns and questions are that you're running into. So as you fill out that survey, please do that. And I know we're not quite done. You don't have to fill it out yet, but you do have to click on that link while the class is still going, or else it disappears. So if you want, just click on the link for a short moment. Okay. Next up, we've got just a couple minutes, so I'm just going to outline a couple for you that could be possibilities. Okay. I was looking at On Semiconductor. And look at this nice channel it's been trading in. Came down to the bottom edge of this channel. Looks like today it took a nice little bounce. It has earnings on November 3rd. So again, if you're somebody that likes to be out by earnings, you might say, well, maybe it can make a move up into this area before November 3rd and consider getting out. That's a possibility with On Semiconductor. The other one you might consider taking a look at, and maybe just using these as maybe some paper trade opportunities. Here we have AMAT. One thing that's nice about it is the pullback was not that difficult on it. Let's grab this. From 232 down to the low point here was only 6.47%. Okay, so this might be one that's holding up fairly well. I know some of you like to use those whole moving averages that James uses, and it looks like today, after this tiny little pullback, that it's crossing above those moving averages. It could be a close above the high of the low day. Some of you like to use that measure for an entry signal, okay? I would be interested in what you decided to do with those, considering what we've done the first part of our class here. We spent a little bit of time reviewing that Decker double calendar trade, and I'm going to follow through with it. It sounds like RB Tech Traders following through with that particular trade as well. Be interested to see what kind of results happen tomorrow once we can really see what the market's reaction is to everything. And then we put on 2 new trades. Okay, we put on Hood here, long call vertical, fairly aggressive. Dell, another long call vertical, fairly aggressive. When I say fairly aggressive, I mean we're looking for a big return on it, more than 100%. Theoretically, if it were to go all the way to its max theoretical gain, versus doing a trade that's more conservative, like maybe a short put vertical where we just need it to stay where it is or float along or go back a little bit. This one's we're definitely looking for some movement. All right. You guys have been great today. You've had some fantastic questions, which I appreciate seeing what your questions might be. Cameron, thank you for helping out in the chat. he has reposted that survey in there again, so you can click on the link. And if you don't mind, fill out that survey for me here today. Question you have here, Ravin, is how to analyze a long vertical max profit. In terms of analyzing, you're just basically taking the spread and minusing whatever our net debit is to get what our max theoretical gain could be. And it's really hard to get the max out of any spread. And so that's why we're looking to take a chunk out of it, not plan on getting every little last bit out of it. But like, hey, we got a good chunk of it. Let's take the profits and move on to a new opportunity. Okay, so I think that's maybe what you might have been asking there. If not, hit me on X, because we can answer questions that you might have on X. That's another way to communicate with us. Okay, you guys have a great evening. If you're hitting the advanced options workshop, we've got the fourth night tonight before the Q&A session tomorrow. Tomorrow morning, I will be in the chat as we go to the Trader Talks market activity first thing in the morning, right at the opening bell. It's going to be focusing on ETFs. So we would love to see you there. Practice these trades if there's some in your paper account, if there's some that interest you, so we can talk about them. All right, we'll see you again next week. Have a good evening. Bye-bye.